Okay, so let's talk a little bit of what's been going on here in this market. It's been very much a 24-hour news cycle. It even feels like less than that, to be honest. It's like every couple hours we get big news or something changing in what's happening in the markets. Anyways, S&P 500 is bouncing back a little bit today. Yesterday we had kind of continued sell pressure. If we take a look at the 4-hour chart, it's a little bit more apparent what happened. And it's still interesting how, we had that 90-day pause announcement, and this market just absolutely catapulted higher for like a day, right? And then kind of has just fizzled out and kind of drifted sideways to down. I saw a post from a friend of mine on Twitter. You guys might know BK Traders, but Boris, if you know BK Traders, friend of mine, Boris, he put out a tweet just discussing how you can oftentimes get the sentiment of the market, like you can get the sentiment of like which way the market just naturally wants to go based on the drift that occurs when there's not a whole lot of market news. So over here, there was a pretty consistent period of time where if no news was happening, the market would just kind of drift up by default, right? So the default direction for a long time, and most of the time for indices, the default direction, if nothing is going on, seems to kind of lean towards going up. That is until recently, where it feels more of like a negative, pessimistic market, because it almost seems like in the absence of news and activity and stuff going on, the market is defaulting to selling, which is a very unique kind of way of looking at this. Again, you can see we've had this persistent kind of selling that's been going on. And after that big, exciting news announcement and the optimism that, hey, maybe trade deals are going to go through and maybe things are going well, the market has defaulted back down to selling, right? Just getting out of US denominated assets. And this move in gold, right? This massive, massive move that we've seen in the price of gold is kind of right now playing the ultimate role of the anti-US trade, right? As people sell dollars, sell US treasuries, sell US stocks, gold is playing the ultimate role of the anti-US trade. Now, I'm not, actively wanting the US to fail. I'm proud to be an American, but it's not about that. It's simply that's the flow of traffic right now. The flow of traffic is people are worried about what's happening in the U.S. and the government in the United States. If you're looking from the outside looking in to the U.S., you're like, gosh, I don't know, like everything is changing over there. They're practically declaring war on a whole bunch of countries through the trade war, and people might just be a little not willing to deal with that. So they're moving to things like gold. That seems to be at least the read I have on it from a real simplified version. Nick, you called out my stacking. Do you like bullion or coins? I like coins, but mostly I just have some like silver, what do you call it? Like just, they're not actual coins. What's the name of it? I'm blanking on the phrase. Basically bullion, but not, it's not the bars. It's just the circular silver stuff. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. We've got NASDAQ up 1.18% today. I mean, these are just kind of bounce back moves, right? That's the thing. That's the crazy thing about this is 6 months ago, if you had a 1% move on the NASDAQ, a 1.2% move was like kind of a big deal for the day. Nowadays, right now with this volatility so high, 1% is kind of a non-move. It's crazy to think that that's the dynamic that we're living in, but this market is so volatile, right? You take a look at the VIX, you got VIX still at 31.8. That's still high compared to what we've been in, right? Think about this. If you are somebody who's been trading for the last, well, let's go back the last like full year, right? In the last year, outside of that craziness that we saw in August, for the most part, you've been living in a pretty low VIX environment. And what I mean by that, if you don't know what that refers to, is the volatility index gives you an idea of the expected move according to the options market on specifically the S&P 500, but it pretty much ricochets into all assets and commodities and things like that. Like basically when the VIX is really high, everything moves a lot. When the VIX is really low, everything moves a little. So I've seen a lot of people who are, and not to, this has been a tough year for a lot of traders, but I think part of the reason that it's been such a tough year is because people get used to one environment or the other. And I talk about this pretty often on my channel, but most of the time, when you get an environment like this, what people are going to do is they're going to get used to trading in that environment. They're going to get used to a high teens, low 20s VIX. And that environment is a very different environment than the one we are in right now. When you get up into the 30s on the VIX, that's a no joke VIX. That means that things can move really quickly. That means, yes, that's the word, rounds, silver rounds. I have a good bit of silver rounds, not a crazy amount, but I got some silver rounds. You changed a bit your speech when it comes to the U.S. staying on top. Well, Andrea, that's a fair question. You kind of have to, if you're a trader, you have to roll with the punches. You have to roll with what's showing up in the markets, right? And price and fundamentals tell you a story, right? We take a look at the dollar. The dollar index is not acting as a safe haven. You take a look at treasuries. Treasury yields should be dropping pretty hard right now as people buy bonds aggressively. We're not seeing that. And we're seeing U.S. stocks underperform foreign stocks pretty dramatically. So am I a USA, downfall doomsdayer? Absolutely not. The U.S. still has the best companies in the world. We are the home of innovation. We build cool stuff here. And we have a really important consumer to the global trade network. That does not, however, mean that we can't have a recalibration period, a part of this time where there's a whole lot of uncertainty about what the future entails, and people look for alternatives, right? I'm long gold, not because I think the US is going to crumble to zero. I'm long gold because the dollar's uncertain right now. We've had some mixed economic data points. Fear is very high. Uncertainty is very high. I bought this thing on a pullback, and it continues to get a very bullish reading within my system. So even if I'm pro-American. I think it's going to work out, whatever. Put that to the side for a second and just trade the environment that you're in. I think a lot of people are going to get themselves into a lot of trouble this year on both sides if they let kind of their biases completely dictate what they think about this market, right? I like gold for a number of reasons. I'm super long-term bullish on metals, but I like them especially right now because institutional money has been flowing heavily into gold. I can show you that. Like, that's not something I'm just saying that sounds cool. We can see it in the the Commitment of Traders report. Take a look right here. What we've got is the COT data history, right? And you can see the blue bars are the long positions on the futures contracts, and the pink or red is the short contracts. What do you notice about this? And this is, again, this is non-commercial COT data. This is hedge funds, small banks. This is smart money. What is smart money doing? Smart money is heavily leaned long on gold. What about silver? I bet you it's pretty similar on silver. Yep. Silver and gold, we have heavy net accumulation, bullishness from institutional players when it comes to silver and gold. So what do I do with that? Well, I'll tell you one thing it does is it's factored into the top setups algorithm that if that is the case, we get positive scoring, we get bullish readings for gold, etc. Right? Now, that's not the only thing that we look at. We also look at economic data reports and technical data. By the way, quick little plug, we added this new feature. It's called the Top Setups Sentiment Only tab. So if you're somebody who really doesn't care too much to track economic data, for example, you can actually select only economic data or only sentiment data from our top setups algorithms that we just added. So in this case, you can see sentiment score is crazy bullish for gold. It's our most bullish reading on sentiment and on the top setups overall fully inclusive version of our algorithm. So we're getting very bullish because, again, COT data is incredibly bullish. Put to call ratio is actually showing a lot of people are buying puts on gold, interestingly enough. Right? We could go take a look at that just to study what we're saying there. Let's pull up the gold chart for the put to call ratio. We can still see some pretty heavy bearish bets on gold, which I think is really interesting. So anyways, when we're looking at gold, right, when we're looking at silver, the top setups page, this is really the core reason for why I have been bullish on gold. Another reason that I really liked gold going into this part of the year is because it was this part of the year, and we can look at the historical tendencies of the first quarter into the second quarter of gold, right? That's something that we can track. Why wouldn't we do that? We should. We've selected gold on our month-to-month seasonality chart, and what we can see here is that in the last 10 years, in blue, we can see the 10-year historical average during these months of the year for the price of spot gold. So January through April, this period of time in the last 10 years has been an abnormally strong period for gold. That was part of the reason why I went long gold, right? And that has been a really, I mean, we got way more than we bargained for. Look at the performance this year on gold. We had February, which was pretty much flat, but March and April and January largely exceeded expectations. We're having some insane moves for gold this year. These are way better. Like I expected, or I didn't expect, but I was thinking, making an educated guess that we could see a positive period during this year, but we got way more than we bargained for. So seasonality looks good. The Commitment of Traders data looks good, right? All of that said, all of that combined, right? Retail positioning through the put to call ratio, the momentum to the upside, PMI data coming in soft. These are the real reasons why I took that trade. It's not because the technicals just looked perfect. That's not why I took that trade. The trade was because sentiment, seasonality, economic data, momentum, all of these factors played a part in setting up the trade. Then the technicals were kind of the last domino, right? Pulled back to a key level to 61.8% retracement. And to be transparent, I took an initial attempt at the 38.2% retracement, and I stopped out, took a loss, took a second entry at the 61.8% retracement, and that's the level that really took off and has kept going. I've since just trailed my stop loss further and further into profit on this trade. It's been a pretty crazy trade. I wish I had more that looked like this, really. So that's the full breakdown on that.
If we just hop on the daily chart here, look at the yen. Yen is at this key level. Swiss franc broke this level, but like, you know, we were in this range for the Swiss franc. As far as looking at this right here, this was Swiss franc last week. For the most part, was just range bound. We broke below, but now we're back up. So I don't know if this was a fake out. We'll see how this plays out. But if we continue to stick in this range, I could think maybe, you know, whenever a trend reverses, we consolidate for a bit and then continue upward. It's not always just a quick snap back. Dollar Canadian, also something really interesting. I took a stab at this actually. So my thought process was this was previous resistance, now potentially turning into support, especially looking at the other majors like the yen and the Swiss franc. Well, the yen mostly was at that nice key level as well. And then at this level, we're at the bottom of this range here. So really good risk to reward, super tight stop. And for me, a tight stop is 50 pips. And my first target would be actually something like this, 300 pips, then 460, then the 600. So we'll see how this plays out. There's a really good chance though I'm going to get stopped out. So I'm not going to go ahead and put heavy size at all. In fact, this is a really small position, taking a stab at potentially a reversal in trend. But yeah, that's pretty much it as far as what I'm looking for in the immediate term. Dollar index broke the 100 level, which is concerning. So that's why I'm not really going heavy size or anything like that. If we see this support level got broken into, and so now we have so much room to the downside, which is something that you have to be really mindful of as well. You're also long dollar CAD. I think it's a interesting one, right? We do have oil prices kind of coming up a bit, but if we do see some continuation in oil prices coming down, we could see some more continued weakness in the Canadian dollar, and dollar CAD could actually continue to kind of rally up. So as far as for oil prices, because Canadian dollar is really dependent on oil prices. So if this level holds, you know, it looks like we could have started tapping out of this one, but if we get it here and reject it and continue lower, then dollar CAD could continue to play out pretty nicely, in my opinion. But honestly, y'all, seems like pretty much same old. You know, you got to be really cautious. One thing about the euro dollar that I saw was that we were in this range, and this could be the similar price action to dollar Swiss, where we were in this range. We broke out, but this could be a fake out, and we'll see. But longer term, at least for now, we could see a pullback. My level is still right here, the 112 levels, where I would like to go long, but we're already so much overextended. I don't know if we can get back down to this level all the way. So that's my honest thoughts. If you look at a fib, low to high, that's a bad fib. Let me go to the daily. Fib here, I mean, we could look at different levels, right? Different lows. If you go like from, oh snap, that's not a fib. From here to here, you know, the 50% retracement level is still this 112 level. So that's what I'm looking at. If we look at the fib from here to here, a little bit below the 112 level, but the 38% pretty much aligns with the 112. So we'll see. This thing is stair stepping with strong momentum, like how we've been having small pullbacks get bought into fairly quickly. And this is a really strong market to trade. So going against it, you have to be very strategic about that. Cedric, where am I from? I am from Houston, Texas, but right now I live in Chicago. What were you guys talking about, CFDs? I'm curious. Looking for UJ sales as it goes up slowly. H ball out. Yeah, I think longer, like if we're thinking longer term, yeah, selling dollar yen would be pretty good. Maybe at the 145 would be nice. I agree with you there. But I want to see, like, we're at this big zone right here on the daily, right? If we just flush below it, then we might not even see that pull back to 145. It might just keep dropping. New Zealand dollar and Aussie dollar. Let's see, Aussie dollar has been hanging out at this level. This was a big level. Whenever we broke this, we've been holding it pretty nicely, and it's been holding up. And we got to think about it too. This thing appreciated with like what 450 pips, yeah, 470 pips. So yeah, maybe. And this was a straight shot up. I mean, this was day after day after day of bullish candles closing. So this level could hold it in the past. So I don't know. We'll see. If this thing breaks, then the momentum is clearly very strong. But I could see this kind of holding this level. The New Zealand has the, well, no, New Zealand just broke right past it. These are really difficult ones to trade. If you're not long on it, going short could be pretty tricky. One thing I was going to say, though, as far as Edge Finder, I did notice something. If you look at the eco, let me see if I can pull this thing out. Euro dollar or pound dollar right here. Oh, that's a thick one. Pound dollar got a lower reading. Euro dollar also got a lower reading. They were like 6 or 5, I believe, before. And so now they're starting to taper off, which is really interesting. And then if you look on the flip side here, let's see. Oh, wow. This changed. UJ was like -12 or -10. Dollar Swiss was like -8. Now they're like -2. They're like on the fence, -3. As far as the eco version goes, I could imagine it's different on the original top setup page. And then also dollar CAD is now getting a 1 reading. So I did notice that on the economic key maps that we have, things are starting to flip. So we got a positive retail sales, GDP growth is good for now. We got the manufacturing PMIs that came in a little bit softer, but we have strong employment data, and CPI came in good. And what I mean good, like, you know, lower inflation. So we'll see if this thing starts to flip a little bit blue. If we get some more growth data coming in strong, that could fuel more dollar bullishness.
Dollar index, currency strength wise, we have today the Japanese yen was strong and then back down. The dollar's coming back a little bit. Swiss is weaker. Kind of happy to see that, but the vertical axis is lower. So not a ton of movement as far as Swiss franc weakness. Watching gold, of course. Gold hit $3,500 an ounce, I believe, this morning, and it's faded slightly. Dollar is watching lows, right? Like, keep an eye on your lows. I think the dollar is still an active sell as long as we see this support act as resistance, or as long as you're watching a lower time frame. Look for pullbacks. I talked about a bottoming formation. If you're anything short the dollar, so your Aussie dollar long, Euro dollar long, pound dollar long, New Zealand dollar long, dollar CAD short, dollar Swiss short, the dollar index has moved enough. The dollar index, by the way, is off to one of the worst starts since 1995. 30 years of dollar price action. This is as bad as it's been in 30 years. So pretty crazy. But if you're trading FX and you've got some dollar profits, move those stop losses, because I do think we are due for a correction. There's still some symmetry down here, so any pullback could still continue to symmetry. But at this level, I wouldn't be surprised if we end up making a decent pullback towards support to become resistance. And then we see if this is a bigger, more permanent trend on the dollar, then at the 100 to 101 zone, we look to see if that resistance holds and we can resell the dollar again. Okay, oil. Oil at 63.24 off of the April 9th low. You know, it's fine. I don't really have a good direction on oil. I talked about this yesterday. If oil comes back down, to revisit the lows, I'm probably going to look near-term long on oil. Gold, pretty nice wick to the north. As far as a, you know, there could be some profit taking. Pulled some data out yesterday. Gold seeing record inflows, and we essentially have a housing bubble in the U.S. Global ETFs performing well that are non-U.S. So I mean, most of the Eurozone, this is money leaving the U.S. and repatriating back home and seeing, you know, local ETFs do a lot better, or local, you know, country performance doing a lot better. Eurozone EZU at 13%. So it's actually a good one. This would be a global ETF scan. So most of Europe doing pretty well still after a big shakeout. Emerging markets. I mean, this is kind of wild. It's like emerging markets are performing better than the U.S. right now. Yikes. So we'll see. I mean, time will tell. But just more frustration out of the U.S. You know, the noise. It's like, I think Trump called out our Jerome Powell and called him a loser yesterday. It's like, cool, good, you know, good etiquette, I suppose. Look, I don't think just trying to bully the Fed into cutting rates is going to do anybody any favors. I think that the victory lap of the U.S. is way too premature. Saying that we've got this, you know, this trade war stuff is working, everything's down, there's no inflation. It's like, that's total BS. The yields are up higher than Liberation Day. There is no evidence that suggests that if the Fed is going to cut rates and be forced to cut rates, that it doesn't respond the same way that it did last September. That is my biggest concern. If anything, I would say the Fed shouldn't do anything right now. And naturally, this is a noisy event in the market. All right. If we do anything reactive, I think the bond market sniffs it out, and I think we go higher. And that is the exact opposite scenario. So how would Trump backpedal that? I mean, blame the Fed, most likely. It's like, well, they cut rates, they were too late. They were too late. No. Like, if they don't do anything, there's a chance that this can just settle down. You know, is there a chance that rates can settle back down? I would hope so. Is there a chance that yields could lower a little bit and actually see bonds go up slightly? Maybe. You know, I mean, TLT is still in red, hitting, you know, back to lows. We're sitting in like a 4-year nasty drawdown in bonds. Maybe if we're lucky in the TLT side, it holds this area of support, but you just don't know if it's going to be the trade-off where this offers safe haven cushioning if the stock market is dropping. I think, you know, within reason, we actually have some signs of the market finding some lows, whether those lows are, you know, revisiting the April 7th low, or we have a little wave structure like I talked about yesterday, which was swing up from the 7th to 9th. That created a big swing, and then we pull back, we faded at the high, we pull back again, we tested that low yesterday. I could see this move happening. So if this is the start of the markets coming back up to retest highs, that wouldn't surprise me. Am I getting crazy bullish right now? No, not even close. I posted some videos on my channels and sent out some updates where, look, I'll get a little bit more bullish if we revisit lows. I will start reestablishing hedges up here as a just in case if we start revisiting this cluster right when all this thing started on this first breaking point. And I'd be pleasantly surprised if the market finds a way to break through, you know, 57, 5800 and get back to all-time highs. This would be like the surprise. This would be the expectation, and this would be the I've got to be braced for the downside. You know, it's like I've got to be ready for anything, and I think all of us do. None of this is going to feel easy. This is some of the most confusing commentary narrative every single day. It's like we're seeing gaps intraday, or gaps like, you know, every other day is like a 0.5 to 1 to 2% gap. and then you kind of deal with the intraday price action. Sometimes it's aggressive, like yesterday's intraday price action was pretty aggressive. Today's intraday price action so far is pretty quiet. Pretty quiet here, pretty aggressive. Just it's every day is a new day, you know, so it's kind of wild. All right. Let's go gold and silver. So gold, a little bit of a rejection candle. Doesn't necessarily mean anything. This could still offer up a nice little buy on the dip. I mean, look, this is a daily time frame. I'd love to see some type of pullback on a daily time frame that actually matters. My question is, I've been talking about this a lot. Obviously, I'm expecting like a bigger pullback. Okay, but even a pullback to the 21 period might offer another dip to take this up into, you know, capitulation type highs. I'm not sure. You know, I was curious if the dollar had to pivot really hard in order for gold to pivot, but that may not be the requirement. So I don't see gold at 34.36 and think I'm going to buy it right here. If I'm going to buy gold, okay, if I'm buying gold here, then I have to be prepared for that being level 1, that being level 2, that being level 3, and that being level 4. Like if I'm going to allocate whatever it is, if I'm going to put $10,000 into gold, it's going to be 2,500 here, 2,500, 2,500, 2,500. That's how I'd invest it. I wouldn't put everything at the top. You know, although it may get there, it may not. But I need to be ready for, if we have a correction, I want to be scooping up that correction and then still maintaining a longer outlook on gold. Okay, silver. Silver actually green on the day, up 0.85%, and gold is 0.35. This is another chart to keep a close eye on, XAU versus XAG. If this retreats a little bit, then we might see silver, you know, kind of slightly get the upper hand in relative performance, which is why I'm long both of them. So it's still a good trade on either direction. I just think that gold is a little bit overextended. Silver might be a really good catch-up trade, if that's the case. Hopefully it is. Bitcoin. Hey now, Bitcoin. Breaking some recent highs. And, well, looks like we have some confirmation. You know, follow the price action. We are on the right-hand side of the trend line where there is some decent structure right here. Therefore, if we are breaking, if we have a flag pattern, that's one way to continue on with a Bitcoin trade. Or if we break the trend line, come back and retest the backside of the trend line, another opportunity to get long here, or we revisit lows on the right-hand side of the trend line. One of my favorite trades. If you see some good technical confirmation, is any type of pullback, buy and then be prepared for a area 1, area 2. But the nice thing about being on the right-hand side of the trend line is it gives the bulls some permission to say, hey, everything lines up, everything's confirmed. It's not the guess of the lows, it's not the anticipation of lows. This is looking pretty darn good. So yeah, I mean, a nice little move above 90,000, taking out these recent highs from March. Those highs are around 88.5. So, you know, is it pullback first, or is it just drifting? Are we going to revisit, you know, 108, 109? Time will tell, but this does look pretty good. I still like gold on dips, just not excited about buying the highs. I love silver. I think that silver getting back to these recent highs would be pretty encouraging. I still have a measure move on silver towards 35.88, and I'm longer term on silver going into the 40s. So quick spot check on everything. CEF. Do a little bit of everything here. CEF is up around $4,700. GLD up around 24K. PHYS up around $4,700. SLV up around $9,800. So still going to ride them out. I think there's a lot of upside potential on silver, and I think there's still, you know, bubble-licious type price action on gold. And you know, I still want to buy dips on gold. I just want to see recent dips, and if I was going to allocate again, here's what I'll do. I'll say that I don't mind for my portfolio allocating like another 1 to 2% to gold. Okay, I don't think it's a bad play. It's been one of the few shining stars of this year's asset class performance, outside of being like totally non-US and trading basically like individual European countries for a little 15 to 20% bump. Not the play I really thought about this year outside of getting some non-US exposure, but 1 to 2% gold. If I were to allocate that, I would space it out over this entire area. So I'm just going to be pretty tactical with the allocation. I don't know if gold makes this correction, or it just breaks, pauses, and it just stays relentlessly bullish. But if silver can outperform in any capacity, then I'll still be happy with silver. But I think the journey is not done.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.